Clayton Moran, he is joining us right now. He's a senior analyst at Benchmark in Florida. He maintains his hold rating on Yahoo. He's got an $18 price target, and he's joining us this morning by phone from Boca Raton, where it is much nicer than in New York City, I'm sure it's safe to say. Clay, thanks so much for joining us this morning. Scarlett just gave us a lot of details there on Yahoo. So, I mean, it was much stronger than expected. But, of course, there's still growing concerns out there, right, about Yahoo's growth prospects. I mean, how much further can they take this? They still have to compete with some pretty heavy hitters for our time, ad dollars. I'm just thinking of Google and Facebook.
Yeah, that's correct. And, you know, I wouldn't call it much stronger than expected, not at all. The quarter that they reported was right in line with expectations, just a touch above on revenues. And the outlook that they gave for the second quarter was also right in line. And it's not a growth story. They're not growing today. In fact, revenues contracted 6% year over year. And that's really a function of, as you mentioned, the significant competition they're facing from Google and Facebook, among others.
Clay, one of the questions that continues to dog Yahoo is how are they going to unlock the value that is locked up, so to speak, in their Asian businesses? And I don't get the sense from what I've read today that you got enough information on that after Yahoo reported yesterday.
Well, it was very Larry Page-esque last night in terms of the disclosure on Yahoo Japan. As you recall, the new CEO of Google, Larry Page, had very little to tell investors in his first call as CEO, and that was pretty frustrating for the investment community. It was the same thing last night in regards to Yahoo's effort to unlock value in Asia. All they said was that they are making progress. They wouldn't expand on that at all. I think essentially they're still in discussions about somehow monetizing the Yahoo Japan asset, but anything that they have discussed is really not final enough that where they can talk about it with the investment community. So very unclear as to what the status of that is right now.
Clay, if they were not so clear about what's going on in Asia, one thing that CEO Carol Bartz was clear about was blaming Microsoft and saying essentially because of their agreement with Microsoft and Microsoft's technological limitations, it's actually hurting their revenue. Is that fair to take a shot like that at Microsoft?
Well, certainly they disclosed that the revenue per search coming out of the Yahoo-Microsoft Search Alliance is below expectations. It's below where Yahoo was doing prior to the Search Alliance. So it is disappointing. But one thing to note, it's not affecting Yahoo's financial results today. Microsoft has guaranteed the revenue to be at the level per search that it was for Yahoo through the first quarter of next year. So it's behind expectations, and there's some concern as to whether it will catch up to where it should be. But for the time being, it's not actually hurting Yahoo.
Clay, one last quick question before we go. You didn't see it yesterday, and you haven't seen it since that earnings report. What would it take for you to upgrade Yahoo to a buy?
Well, there clearly need to be real signs of a turnaround. Carol Bartz last night said the company was on track. That's not an impressive turnaround if your revenues are contracting. That's not the type of on-track turnaround that I'd look for. They obviously need to return to positive growth before, we would get excited about this story at all.
Clay, thanks so much for the time. Clay Moran joining us there, senior internet analyst at Benchmark.